Hello, hello. It's JJ Conway. How are you doing today? Today is our fireside chat. I'm so excited to be with you today. I want you to be able to dump debt, build wealth, and prosper. And tonight is the night that I answer your money questions to help you do just that. This is our fireside chat. It's where I will answer your questions with what I hope is style and grace. I'm so excited. Now, a couple of announcements before we get into it today. I'm going to give you guys an opportunity to give you guys and gals an opportunity to go ahead and ask your questions. If you have money questions, go ahead and put them in the chat. We're going to start off with our question of the day is, how much insurance should I put on my vehicle? So I'm very excited about that. It's a very timely question for me. And then we'll go there. We'll free flow it to whatever questions you have. Go ahead and drop them in the chat. Go ahead and drop them in the comments, and we will be able to do it. Now, if you're on YouTube, YouTube has a chat feature that sometimes doesn't show up on StreamYard. So if I don't get to your question, there's two other ways you can ask your questions. And in fact, I'm going to put that up there at the bottom right now. I got an anonymous form at askjjc.com. I also have the free conference call going. The free conference call is in Q&A mode. So what that means is I won't be able to hear you till I unlock you. All right. And so what you do in order for me to unlock you is you do *6, and on some carriers it'll ask you to press 1 to confirm. And what that does is it puts you in the Q&A queue. And so it'll show me a little raised hand, and I can click on you and you can ask your question through the free conference call. All you got to do is dial that number right there. No, it's not on yet. Right there at the bottom of the screen. There it goes. That number right there. Just dial that number and that access code that puts you in the queue. Or if you want to be anonymous and you don't want your voice on my podcast, well, then you can just go to askjjc.com. That'll take you to a Google form where you can ask your questions. All right. So those are the three ways to ask your questions tonight. I'm so excited that y'all are here with me and so excited that you're going to be on there. Hey, so happy you're here with us today. We're going to answer some money questions. All right. So our first question to kick us off today is how much insurance you should have on your vehicle. This is such a timely one for me because, as many of you know, we got rear-ended coming home from spring break. Well, we weren't going home. We were going on our second part of spring break. You know, I tell you what, the devil is a liar, because I had my John Maxwell conference, and the boys and Mr. Man, they got to go to Universal and Disney and do all the things. Legoland, Florida. I mean, they had a blast while I was at the conference. I had a blast at the conference too, but it's one thing when you're at a conference and you're working and you're speaking and you're facilitating, and it's another thing when you're on the beach relaxing or at the amusement park enjoying the rides and the shows. All right. And so we left John Maxwell and we were heading to the beach. Y'all, we were 12 minutes away from my beach. One of my favorite beaches, one of my absolute favorite beaches, St. Pete Beach down in Tampa. But well, okay, let's be real here. My absolute favorite beach, it's got to be probably some places on the cruises. But my favorite one that I can get to quickly and easily is St. Pete Beach down in Tampa. But my second favorite beach is Destin, and Destin would be my first, except it's so built up. So anyway, we're 12 minutes, y'all, from Destin. And we get rear-ended by some girl who was looking down at her phone. Even told the cop I was looking down at my phone. And so I did not get the rest of my spring break week. The rest of that week was just spent in a lot of pain and dealing with insurance companies. And then I'm like, I know I've been rear-ended a couple times in the last 5 years, but I promise I wasn't even driving. Y'all. So this is a very timely question for me, because in my attempts to get the car fixed, it's still in the shop, y'all. This was 2 months ago, and that car is still in the shop. In my attempts to get it fixed and to get my everything taken care of, I was reminded how difficult it is in order for people to get their car replaced when something like this happens. This is why I highly recommend, one, that you buy your cars in cash, and two, that you have a sizable savings account to handle these kinds of situations. All right. So let's talk about how much insurance you can have. Traditionally, every state has their minimums, but traditionally you're going to want to make sure you have enough insurance to cover potential losses. Insurance, I know some people on today, you're going to not like what I have to say about this. Insurance is not a money-making tool. It's money you spend to mitigate risk. I am paying the insurance company $50 a month, $60 a month, whatever it is. I am paying the insurance company something every month so that if something catastrophic happens in my life where it's going to cost $100,000 to get people's health back together, get their cars taken care of, that the insurance company takes care of that. I am transferring the risk from me to them. But the reality is you're not really transferring all of the risk, okay? So there's lots of different kinds of risk. For example, if you buy a brand new car with a car loan, the minute you drive it off the lot, it is worth a lot less than you paid for it. So for example, when I bought my original RAV back in 2011, y'all, other financial coaches were mad at me. They're like, I can't believe you bought a $31,000 car. I'm like, well, I paid for it. You know, technically I did let them sign me up for the loan so I could get the free package, the free extra package, free $3,000 or $4,000 extra package, but then I paid it off because I wanted the freebies. So the thing is, when you buy a car and you drive it off the lot, the RAV4 and most Toyotas and most Toyotas, they might lose $1,000, they might lose $2,000 or $3,000. But another one I was looking at was the equivalent Mitsubishi, and then the equivalent Kia. And the Kia, it was like they were all like $30,000, right? And then the dealer for the Kia was like, well, we're going to give you $12,000 off of this vehicle right now. You're going to get it at the dealer cost. And I was like, it's still not going to be worth that once I drive it off the lot. A brand new car is not worth what you're paying for it at the dealer and you drive it off the lot. But some cars depreciate a little and some cars depreciate a lot. I know the pandemic kind of did that a little wonky number on us, right? Because a lot of us who bought cars before the pandemic, once the pandemic was in full swing and couldn't nobody get a car or a truck or anything because all the electronics were made in facilities that were now shut down due to the pandemic, well, the value of your car was artificially inflated. But we cannot go on that. If you are somebody who came of age and started driving during the pandemic and you're like, sweet, I bought this car at the end of 2019 and sold it for $5,000 more at the end of 2020, let me just assure you that is not normal. That is a very special situation. Okay. And so generally speaking, when you take a loan out for this car and you drive it off the lot, you are already in the hole. And remember what wealth is. Wealth isn't how much you make. It's not how much you hold. It's not how much you spend. It's how much you have. And net worth is calculated by adding up all the assets you have, subtract from that all the debts that you have. So if you have a $50,000 car and it's a sweet ride, oh, it's nice. It's got the lights on the inside and on the outside, and you got the sparkles and the nice luxurious package. Look, my girlfriend got one of those cars. I love it. She got a good deal. Her daughter got her a good deal on that car. And I'm like, I'm going to go get me one, right? But I'm going to tell you what I'm not going to go do. I'm not going to go pay $100,000 for a brand new off the lot, and then it's only worth $70,000 day one. Okay. But let's just say you did. Okay. Let's just say you did. You went and, well, most of you probably didn't buy that car. She retired and splurged a little. Let's just do an average car, $50,000. All right. Or I'm out in Texas. We got these pick 'em up trucks. All right. $80,000 for a truck. But you went out and got you a $50,000 car. You drove it off the lot. And now it's only worth $35,000. If you tried to sell that car to somebody else day 2 or 3 or 4, or maybe if your state has 11 lot, day 10, you are not going to get $50,000 for that car. So if you took a loan on that car, your loan is for $50,000, but the value of the car is only 35, maybe 37. Maybe you picked out a nice, good, hold their value for a long time vehicle, and it might be worth 45. You are still negative net worth from that vehicle. So if you keep this going, let's talk about keeping that going, okay? So you lost net worth on the car, then then you did what a lot of us do, because we haven't been educated, because some of our parents didn't ever own their own house until later in life. Some of our grandparents didn't own their own house. We didn't know any better. We went out and got a house with the first loan that would accept us, and it was right now the interest rates were 6%, but back when everybody was paying 1.75, you had such bad credit, you went and got one that was at 9%. Some of us paid more than we needed to pay for a house, for a car, for all these things that we took loans for, because our credit was bad and because our financial history was bad, because didn't nobody teach us about how to manage money when we were young. So we just made all these foolish mistakes. And so somebody else, your neighbor next to you, got $100,000 house, and they're only paying $600 a month for mortgage on it. But you got the $100,000 house, and by the time you did your free loan program, your zero down program, they make it sound so good. Zero down and with no fees. We'll roll all the closing costs in at the end. Anybody, look, you don't have to put it in the chat. You don't have to say amen. But if anybody else has been there with me, you bought that thing hook, line, and sinker, and the next thing you know, while your neighbor who's paying extra on their house, so they're paying $800 or $900 a month on their house, every month they are gaining equity. You're paying $800 or $900 on that house that they're only paying $600 for, and you have a loan that's worth $125 on a house that's only worth $100. Why would the bank do that? Because they rolled everything in, charged you a super high interest rate, and then smiled at your face and told you what a good job you did. You became an American homeowner. Yay, you. Knowing at the end of the day, you are never going to do anything but continue to make the money if you continue that cycle. So now our hypothetical family is $50,000 car, but it's only worth $45,000, $125,000 of a house that's only worth $100,000. Their net worth is minus $30,000. They don't have 45,000 plus 100. They don't have $145,000 net worth because they owe so much on it. They owe so much on it. They are already in the hole trying to climb out. This is why so many people, especially minority communities, are suffering financially, because all these little things that we don't know about money, they get us every time. And we think we're moving on up, but really in the background, what's happening is we are slipping further and further into bondage. I didn't mean to say all that. Let me get back and answer my question. And if you are listening to this as part of the Building Wealth Together podcast, well, if you're a regular listener, you already know that I'm not just the queen of cash flow. I'm also the queen of the rabbit trail, but that was a good one. And you can put that in your back pocket. You can pass that down to your future generations, because we need to educate our children how these things work. Let me throw another one at us. We got our family. They got their $50,000 car. They're so proud of themselves. They got a nice car, got a nice job. They graduated from college, got a nice job, got a nice car. Okay, so they're a little upside down on a day one because they didn't know when you buy a new car off the lot, you already lost money on it. It's okay. Then they got the house and they didn't know by the time you add in all the fees and the PMI and all these other things that you're going further and further in the hole instead of building the equity you thought you would. They'll find that out in 5 or 10 years when they try to refinance, and then they can't refinance. They're stuck at that crazy rate. The bank knows that. See, the bank knows that you won't ever be able to get out from under that. It's going to take a monumental effort to get out from under that. And most of us, we got too much going on to take yet another monumental effort. We got to make a monumental effort to succeed at work. We got to make a monumental effort to do anything in our community. Got to make a monumental effort to deal with our families sometimes. We don't need one more headache, so we just write that check. So now this is our family, right? Standard American family. Especially families who come from humble beginnings. So your first time college, your children of immigrants, your communities, your underserved communities. Okay. So now, how did they get that nice high paying job where they could go get a loan and go get the $50,000 car, right? Well, they went to college and they took out College loans. That's right. Y'all, the government was so good. They made and they pushed and somebody advocated and people picketed and they lobbied. And sometime around when I was a young adult, somebody made something happen in Washington where they changed the rules and now everybody had access to college. But you know what else they did with the rules? Oh, y'all, behind the scenes, they done deregulated the college loans so that you get to go to college. Oh, yeah, you get to go to college. Look at you going to college. So proud of you living the American dream. And attached to that is a non-bankruptable, crazy old interest rate. They can do whatever they want to do with you if it's a privatized loan and not a government-backed loan. College loan that saddles and saps wealth out of the poorest communities. So the communities that really need to build wealth can't build wealth because you're upside down on your car, upside down on your house, and you got this college loan. Your net worth is so far in the negative, it's going to take you 12, 15 years just to become zero. And in the meantime, your neighbor who got the $100,000 house and is only paying $600 a month, like you paying $900 a month, your neighbor that whole time, they don't have any college debt loans because their grandma paid for them and funded their 529. They don't have any car debt because they learned very early that you buy your vehicles in cash. They don't have any financial struggles like you do because they were taught to have a 6 to 12 month savings account. So when life hits them, they kind of have a soft landing pad. Oh, see, I wasn't taught that when I was growing up. All right. And look, even when I learned it, it took me a few years to be able to do it. Because every time I built up a couple $1,000, y'all, I was like, oh, I got money. I know none of you did that. I know none of you ever did that, but I sure did. Oh, I've got money. Or even worse, my so-called friends will be like, oh, girl, you got money. You went to college, you got that highfalutin job, and now you got a little money. Come on, we want to go on a trip. Come on and pay for our trip. And you know what I did? I did it every time. Oh my goodness, y'all don't do that. Okay, anyway, back to the question. Now this family is so far underwater. This family, if they were to get in a car accident, it could bankrupt them. It could ruin their financial future. It could set them so far back. And that reverberation could continue to their children and even their grandchildren if they don't learn solid financial principles. So if you are a family in that situation, I'm not telling you to go get one of them investment insurance policies because that's not really where you're at right now. Okay. What I am going to say though is you make sure you've got enough insurance that if somebody rear ends you looking at her phone instead of paying attention to the road, that you're going to be able to get a new car. And so it's not just paying typical monthly insurance because insurance does not reimburse you the incomplete cost. The insurance does not reimburse you the complete cost of the car. The insurance does not, let me make sure you understand that, okay? Because if you have a car that gets a little fender bender and it's like $1,000 or $2,000 or whatever, they're going to send you a little check and they're going to say, hey, take this and go get your car fixed. And some of us, I'm not going to name no names, but some of us are going to be like, ooh, I'm keeping this check and leaving the car busted, right? Because, hey, what did Maya Angelou say? When you know better, you do better. You do the best you can with what you know, and when you know better, you do better, right? But what I have discovered, because I've been in a couple car accidents, is that little check, and the insurance companies know this, y'all, that little check, it is not enough to fix what's actually wrong with your car. Now, your car might still run, and that might be okay with you. You might be in a position, look, you might be in a position where that's all you can do is take that money and run. Because I remember being $800,000 in debt. Okay, I remember those days. And so, I ain't mad at you if that's where you're at right now, but I want to get you to a place where you can understand, hey, if they're giving you $1,000, that means the repair is probably really $5,000. If they're giving you $2,000, that means the repair is probably worth, $8,000 to $9,000 to $10,000 if they didn't total out your car. Okay. And so when you make sure you fight for all of that and you get it taken care of. And when you do that, you may not have realized that if your car gets totaled out, they are not going to pay you for what you could go buy that car at the dealer. In fact, I'm about ready to do a podcast on how CarMax could make you go into debt I don't know how to phrase it right yet. I'm still playing around with the title and how I want to say it, because honestly, I think CarMax is a really nice buying experience. You don't have to sit there and haggle over everything. I find their prices to be fair. I find that their trade-ins to be fair. You might could do a little bit better on the private market, but if you're a real busy person, they're not a bad option. But let me tell you what they're not a cheap option. Now, I'm not getting any kind of advertising dollars from CarMax. They're not paying me to say anything about them, so I'm not gonna recommend them or anything like that today. But I am gonna say, if you want a hassle-free car buying experience, places like CarMax, and I think Carvana is another one. I didn't like the vibe in our local Carvana. They were too, I'm not their type. Let's just say it that way. And so I can't comment on the buying experience through them, but I've bought a couple vehicles through CarMax now, and they are much better now than when they first opened up. When they first started, my ex-husband we bought our first car together through CarMax, and it was an interesting experience. Great car, great price. But woo, the experience, y'all. It was a while before I tried them again. But when you go to a place like CarMax, they know they're going to charge more for that car because you don't have the hassle factor of having to go to the dealer and nickel and dime them down and do all that negotiation down to get to a reasonable price. So okay, another tip for today, a little side tip. All right. Don't go to the dealer and just pay the price unless they're one of those no haggle and they're actually giving you a decent price. But if I can go to some other place and theoretically get them to come down to the dealer price, the insurance company, in their grand wisdom, assumes that you consumers somehow, some way, are going to convince the car dealer to give you a vehicle at their price. I don't know where that happens, except for like in the case of those Kias where the guy was trying to sell me at their price. I'm like, well, if they're trying to sell it to me at their price and they got to keep their lights on and pay their people, chances are they got it at a discount from the company, or they're getting rebates or something from the company. So it's still not even at their price, right? And so the way that they explain it is like, look, we can't control what you pay here or there because each dealer has their own markup. So we're going to give you this much. You paid this much for the car last year. It's worth this much to us. Okay. So the insurance companies now offer some new products. A lot of us have heard of gap insurance, which is the gap between how much you owe on the car and how much it's worth. Why do you need gap insurance? Because you done bought you a new car, and the minute you drove it off the lot, it's already not worth what you paid for it. And you don't have a 12-month savings account that if something happens, you can replace the car. Okay. So if you're in a financial situation where you cannot absorb a loss like that, or if you have let's say it's a $20,000 car and they will only give you 17,000 or 13,000 for it. If you don't have enough in savings to make up that difference, if something like that happens to you, then you want that extra insurance. Okay. Hey, how you doing, my man? I'm so glad you're on today. Make sure you tell your friends to like, subscribe, and watch. This is good information that other people know that keeps us poor because we don't know. All right. So glad you're on today. All right. Now, look, anybody got a question for me to answer when I get done with this? Let me know. This looks like, I mean, my goodness, I'm at 23 minutes, y'all. This looks like this is going to be the entire podcast episode that we air this on. Okay, so for those of you who are new to me and my body of work, I run the Building Wealth Together podcast, and we do Mindset Mondays, we do Wealth Building Wednesdays, and then we do Juice with JJ's on Saturdays. That's random topics and scams and things that make you go, All right. I love the podcast. We extract a lot of the content for the podcast from these sessions, especially these Q&A sessions. They typically become the Wealth Building Wednesday Q&A. So sometimes, like today, I got a long lesson, and sometimes I got a short lesson, sometimes there's no lesson, but I think this one's going to be an entire episode on car insurance, okay? So we've already talked about why you might need gap insurance, especially if you take out a loan. Although JJ Conway does not recommend you take out a car loan, I understand that some of us did not know that before tonight, so we might be stuck in some loans. So you want to make sure that you have the gap insurance to pay off your loan, the difference between the loan and what the car is worth. And even if you pay for your car in cash, okay, even if you pay for your car in cash, you may want to get, I forget the actual name of it, but there's an insurance rider that you can get that basically says if the car is totaled out and we would only normally pay you 20,000, we'll pay you 24. Or, I forget what it's called. There's a rider. If somebody knows, drop it in the chat because it's kind of a new thing. I don't remember that from a long time ago. Okay. And I remember when somebody asked me for the car we have in the shop now, they literally asked me, did I want that? And I got it confused with gap insurance. And because I don't carry a loan on my cars, I was like, oh no, I don't need that. And now I'm like, ooh, I needed that. I mean, we're okay. Don't get me wrong. Okay. These financial principles work. But if you don't have $5,000 or $6,000 in a savings account in your rainy day fund in your emergency account, if you don't have a 12-month emergency account, if you don't have a sizable savings, you want these little pieces of insurance to put on your vehicle so that when calamity happens, you're not left holding the bag. It's bad enough when you have a trip that's ruined, or it's bad enough that your family schedule is ruined. It's bad enough that you got health issues. Okay. So you're trying to deal with all that. The last thing you want to worry about is getting the car replaced, getting the car repaired. So now let me talk also about health issues, because a lot of times, especially when we're $800,000 in debt, we get the absolute minimum the state requires us to have. And I have been there, y'all. No shade, no pettiness. I have been there. Well, one thing you want to think about as your financial standing increases and as your age and maturity increase and your bones become a little more brittle and everything gets more impacted by poor choice of words, it gets more affected by an impact of an accident, you're going to want to make sure you review your uninsured, underinsured part of your insurance, because certain parts of your insurance cover repairing your car. Certain parts of your insurance cover repairing the other person's car. Certain parts of your insurance cover the property damage, like if you run off the railing and crash into somebody's building, right? There's different parts of your insurance. And one that we often overlook is our own uninsured or underinsured uninsured or underinsured motorist coverage, which basically means if somebody hits you and their insurance policy doesn't have enough money to cover all your medical bills, somebody who was under a neurologist's care for 3 years following that car accident in 2017, right? I lived that. Their insurance policy was a $30,000 medical policy minimum required by the state of Louisiana. And the way that it works in Louisiana is they split, y'all, this made me so mad. If y'all haven't heard, just indulge me for a second. Hey, I'm so glad you're on today. That's the best profile pic ever. I love it. I love the beach, y'all. Let me tell you a little bit about this accident. So I get rear-ended by these kids. The person in front of me stops to turn into Sonic. I guess they made a last minute decision. We want that grape slushy, right? So they stopped to turn into Sonic. I stopped to avoid hitting them. The kids behind me try to get around me, but they don't get around me fast enough. I don't know why they didn't just slow down. They rear end me. I'm stuck for a few minutes. I can't get out. But what I can see in the mirror is one of the kids takes off running. I found out from the cop later is because in Louisiana, if you're a certain age driver, you can't have but so many people underage in your car. And that what probably happened was one of their friends took off running because they knew somebody's looking at me like, oh yeah, we already know that over there. But so they take off. Well, in Louisiana, the way that this person's policy was, even though these 4 young people, while I'm stuck in my car and cannot get out, walk to Sonic, get themselves burgers and drinks or whatever was in the sacks when they came back, still haven't come to check on me in the car. I'm sitting there like this, waiting for somebody to come help me out. And then finally somebody comes to the car, that some lady passes by to come help me out. And they're sitting there eating their Sonic, right? So I'm like, well, clearly youth is on their side. The way the insurance policy works, it said, okay, $30,000 for bodily injury. We're going to split that between the 4 of them and me. So I just want you to think about that for a second. You did hear that I was under a neurologist's care for 3 years. And even though even though I had good insurance doesn't always cover everything. Good health insurance doesn't always cover everything. You have co-pays, and even though I was active duty military, so my health care coverage was free, not all the health care I needed was free. Because the military protocol, well, it's different now, okay? They care more about the concussions and things like that now. But back then, the military protocol was, we're going to leave you basically rot for 6 to 12 months, and if you don't get better, then we'll do something about it. And I knew, because I had a previous colonel at our job who had gone through something similar, that you have to act quickly and you have to take action and get the chiropractic care and get the hyperbaric treatments and get all those different things that you need to get so that you can function again. And it can take a long time. So these kids got the money. I'm like, that money should have gone to the neurologist instead. But anyway, that's why you have uninsured or underinsured coverage. They had insurance, it just wasn't enough to meet my needs. My insurance bills, my healthcare bills from that thing are so deep that they make a stack about this tall. Like, all the bills, I have them in a printer paper box over there in the closet. They make a stack about this tall. So, you want to make sure you're adequately covered, and you want to make sure, if you're fragile, or if you've had a couple of accidents in the past, or if you're like me and you got things to do. I run an international company. I don't have time to be all broken up and busted up. That month I lost with this last car accident. Man, can you imagine if that extended to 6 months or 12 months? That's what happened last time. It was such a long recovery, and I lost clients, and I had to close down, and I couldn't do what I needed to do. And if you're, look, I'm not the primary breadwinner in my family. I think I make more, but we put my money towards building the company, and we put it towards our family fund. But Mr. Man takes care of my needs. I do not want for anything, even if I'm not earning anything. But see, it wasn't always like that. I remember being a single military mom, making good money, but I was $800,000 in debt. I couldn't afford to be out of commission. I had 3 side hustles in the ministry and my day job, just trying to get myself together, So anyway, you want to make sure you got enough insurance to cover all these different things that I've talked about. Okay. Woo, that was a fun question. I guess I went a little long on that, but that's okay. That's okay. You know what? That's what we're here for. Today was car insurance day. All right. Now, look, you have an opportunity to drop some questions in the chat. I'm going to go check the free conference call. Hey, y'all on free conference call. I'm so glad that you're on. I keep thinking about whether or not we need to keep doing this on free conference call, because we don't get that many people on anymore. But look, as long as somebody's still on, I'm going to keep it going. So if you have a question, I don't see any hands raised, but if you have a question, go ahead and ask that, raise your hand so you can ask the question. I'm going to go ahead and check the form at askjjc.com and see what kind of questions we have tonight. Let's see, viewing sheets. That makes it easier for me to see the questions that came in. This is your opportunity, y'all. There are people that pay me $300 and $400 an hour to sit down with them and answer questions about their finances. This is your opportunity to get your questions answered at no charge. Okay. All right. Let's see. Oh, I need to make this text bigger. I can't even hardly see it. And I did, y'all. I finally went to this is so hilarious. The Lord is so good to me. Y'all, I know it's vanity. It's vanity. Ecclesiastes says life and everything in life is vanity. And you know what? I'm just going to tell you, I'm not a super vain person, right? Like, I'm not one of those people that everything has to be, see, I shouldn't say that, because you know what? A lot of my best clients actually are fabulous that way, but like, they have the ability to do it. So I'm not knocking you. If you're one of those people that every hair is perfectly in place and your makeup is impeccable all the time, my hat's off to you. I'm just so thankful that they have hair and makeup artists backstage. So when I go to a speaking engagement, there is somebody to stand in the gap for me and my lack of ability to decorate either myself or my house or my church. It's such a blessing. See, it's just such a blessing to have people with different talents, because they bless my soul and I bless their soul, right? But on this one thing, oh y'all, when that doctor told me last year, no, 2 years ago, I'm probably gonna have to come out these contacts and go into bifocals. I was like, the devil is a lie. I'm not trying to hear that. But I noticed, they say black don't crack and beige don't age. But I noticed that, I was just having to hold things a little further back now than I used to. And sometimes I was having to take my contacts out in order to see the teeny tiny things on the phone. Or, I said, oh, I'm going to have to go back to this doctor. But y'all, they done come out with some multifocal contact lenses. Oh, y'all, they done come out with, they're like bifocals in a contact lens form. So I can keep on being vain and cute. so so I do have my new eyes. But I still needed to make this text a little bit bigger here. Okay. All right, let's go see here. Okay. Wow, this is pretty cool. Um Recently inherited. This is pretty cool. Okay. Before I answer this question, because the question is about how to handle inheritance. Before I answer this question, um, I want to state a couple things about inheritances. Okay. This might turn into an inheritance half hour, which will then be an inheritance wealth building Wednesday for the Building Wealth Together podcast. Generally speaking, when people come to me, they are usually the child that gives up their life to take care of mom or dad, whoever's left. And their intent is, the parents' intent is, you come live with me and take care of me, I'm going to give you the house. But they don't want to tell the brothers and sisters, because the brothers and sisters are bullies and mean. They don't ever tell me that, but that's really what it is. They're bullies and mean. And so they don't ever want to straighten that out, and they don't put a will together. And as soon as mom or dad dies, the siblings sell that house out and usually find a loophole from which to keep the good kid, the nice kid, from getting whatever they should get, or even getting a portion of what they should get. Okay. So when I see a question like this that says, I got all this stuff from an inheritance, that rarely happens with the people that come to me. A lot of times the people that have come to me, they're like, I was supposed to get this, but I didn't. I was supposed to get this, but we had a falling out. I was supposed to get this, but my brother stole all the money from my mom's account. I was supposed to get this, but my brother and sister, they found a way to write me, or to get me out of it. And my mom didn't have a will. My grandma didn't have a will. My uncle didn't have a will. Okay. So when it comes to inheritances, make sure that anything you are counting on is codified on paper and that it's legally valid. And if your mom or your dad or your grandma or your granddaddy or your auntie or your uncle or your sister or your brother says, please come live with me and take care of me and give up your entire life, quit your job, move across country and do these things for you, and you do because you are a nice person who cares and gives. I'm a nice person. I understand how this works. Okay. I understand the pull to be that person that helps and wants to serve and wants to help. I get that. Okay. Because at my core, that's why I do what I do. I want to help people, right? But before you do that, make sure before you do that, I'm going to say this one more time after I say hi to Eric. Hey, before you do that, make sure that what you are expecting is on paper. Because let me tell you something. If your brother and your sister or the other siblings or the other people who are supposed to be helping you out with grandma, mama, daddy, whoever, aren't helping you out with grandma, mommy, daddy, or whoever, chances are they're not going to take care of your needs either. And they're going to find every way they can to make sure they get as much as they can and you get as little as you can. Okay. And it breaks my heart sometimes. There was a house I was trying to buy one time. It was right around the corner from my other house. So I like being able to manage my properties myself on site. Like, I like being the property manager. I'm pretty good at it when I'm in person, when I'm in town. And so the guy was the house needed a lot of work. It had one of them old fashioned boilers. It had a lot of soot, the kind that puts the soot all, it's like coal or something. It kind of puts the soot all over the world. This is in Maryland. So if you live in Maryland, PA, New York, stuff like that, you know what I'm talking about. And I was like, it's going to take a lot of work, so I'm going to give you a 180 for it. And his brothers and sisters were like, well, houses around the corner are selling for 350, and we can't sell it for 180 because then we won't have any inheritance. And I was like, but if you don't sell this house, you can't get your mother into the state care, because state care was contingent upon her having nothing. But they didn't want her to have nothing. They were literally hoping she would die so that they could sell the house and pocket the money. And I'm like, you're going to deny your mother care over, between the four of them, $300,000 house, which really they weren't going to get more than 200 for it anyway. You're gonna deny. Let me think about this for a second. You're gonna deny the woman who bore you, who reared you, who did everything for you, and back in the day, generally speaking, gave up having a career to take care of you and grow you into the man or woman you are today. And you're gonna throw that away and have her uncomfortable in her last days over $50,000? Oh, people do it all day long. It's so common that, in fact, when I went to George Mason for my financial certificate, they were like, the common phrase for when we go to take our CFP exam, they're like, remember that all the heirs want is money. All the heirs want is money. It's the rare heir that actually cares. Okay, so I'm saying that, but when you hear this question, do not think, oh, one day I'm going to have a rich uncle die and leave me all this stuff. Chances are, if it's not on paper and you don't already know about it, it's probably not coming. I'm not saying it won't come, because I do on occasion get people who are in that situation, but I'm saying more people that I get are the people who thought something was coming. But once mama finally died, they found out that sissy been spending all that money. Ooh, she been shopping and taking some nice vacations, and she's been doing all these things. And if she's smart about it, she done build the estate so it looks legal. But you can look at the situation and realize she done siphoned away all mama's savings. Okay. And so make sure, whatever you're counting on, you got it in writing, and everybody is very clear. If you are a parent today and you can't, well, wait a second. I was about to say, if you are a parent today, get that will together and make it clear. But you know what? The fruit doesn't fall far from the tree. And chances are, ooh, people are going to be mad at me for this. I'm about to drop half my viewers right now. chances are, chances are, you're too passive aggressive with those kids that would kick you to the curb and take advantage of the younger one, or take advantage of the middle one, or take advantage of whichever one feels devoted to you. And you probably aren't going to do this because you either too passive aggressive, you don't want to upset people. And I remember what it was like after that car accident in 2017, when the people around me set me to the side. Like in the Air Force, they moved me from my highfalutin job as chief of protocol for a 4-star general. They moved me to this other place where I didn't have a desk, I didn't have a phone number, I didn't have any duties assigned for 4 months. Most of the time, I sat at the front desk and said hi to people as they came in. And I piddled around on the computer, and I created classes that they never let me teach. I created a lot of classes. In fact, it came back to bite me later because they said I was doing work. I was doing business work from the job, and I was like creating classes for the job. So I had to fight my way out of that. But I know what it's like when people set you aside, and you just want to do anything you can to get their affection, or to get some appreciation, or get some of their time. And sometimes we feel like, the older we get, I see the more common that it is. We feel like if we throw money at our children, they'll either come around, or they'll at least be there for a few minutes. And for just a few minutes, we can pretend that everything is okay. And for just a few minutes, we can pretend that our children love us. And for just a few minutes, we can pretend that everything is all right. Everything isn't all right. And if you're in that situation today, I'm going to ask you to take a step in a direction that's going to honor the child that's taking care of you, and take a step in the direction of reality, of creating genuine, real relationships with the other people that are around you, wherever you can find them, rather than throwing money at people who do not care, even if those people are your kids. Because I'm going to tell you right now, and I love this. I don't love this. I don't love this. I don't love this. I love that somebody else knows this because it's so true. Eric posts, kids can't wait till the parents die to sell everything they didn't work for. And that's what I'm saying. And it was so common. They told us that in our financial planning school. All the heirs want is money. The heirs don't care. They want money. Okay. And so, and like I think about my kids, one of whom needs to lay down and be quiet and stop making noise during my podcast. I think about my kids. I got one that really, really, at this point, appears to love his mama. I got another one that every time he falls for a girl, he kicks mama and daddy and the rest of the family to the curb. And when he falls in love with a girl, for however long it is, he becomes a whole different person. And I look at that and I said, okay, I got your number. I can see now that I'm not going to trust everything in my life to you when you're older, unless that changes. And that hasn't changed yet. And so what I see now, look, what you see is what you get. What you see is what you get. I'll never forget. And I wish I would have done something about it. I wish I would have done something about it, y'all. It's one of those things that I didn't do anything in the moment because I didn't know what to do. But now let me tell you what, I take action when I see it. And so I don't regret and feel sad about it. But it is one of those things that I will never forget. Because when we went to go visit a lady who helped someone close to me get into college, and I was happening to be there with them when they went to visit and say thank you for doing this for me. And the son of that woman was there, and while we were in the parlor, you know how the previous generation, you didn't go into the main house, you went to the nice looking parlor and you had your visit and then you left. Well, while we were in the parlor, she went off in the kitchen. Son comes home and gets mad at her for not serving him something or other, not having something ready. And he's literally beating her in the other room. And I'm like, I'm looking at my companion like, we need to do something. And they were like, don't get involved. This isn't our fight. Don't get involved. And I'm thinking, well, I'm not from here. I don't know anybody here. I know you could call 911, but I also know that in domestic abuse situations, sometimes calling the cops can invite worse abuse after the fact. And if I wasn't going to be there tomorrow to help clean up the mess, I was like, well, I'm just going to listen to this person. And I'll tell you what, I don't do that anymore. But I have seen that kind of thing happen over and over and over. I was in a hospital program with somebody. Same thing was happening at home. Their kids were beating her all the time. And I don't know why I'm on this. This was not with my intention. I'm trying to get to this person's question on what to do with an inheritance. But I'm telling you right now, stop throwing your money at these kids who can't stand to give you any love or can't stand to give you any appreciation. I know you sometimes feel like your mind is going. I know your body and your health aren't where they used to be, but that doesn't mean you deserve disrespect. That is not how my God wants his children treated. And I really do believe that whoever needs to hear this today, you need to know that you have value, you have worth, you have something left to offer this world, or you wouldn't still be here. And the longer you allow people to come into your life to treat you horribly, and the longer you allow people to come into your life and speak negativity over you, the longer you allow people to come in and hurt you, physically, emotionally, financially, the longer you are stalled from doing what you were created and still here on this earth to do. You have value and you have worth. It doesn't matter what your kids think. It doesn't matter what your spouse thinks. It doesn't matter what anybody around you thinks. Now it may matter what you think. Because if you don't think you have value, you communicate that out to somebody, and then that's all that you get back to the world. But there is something in this world for you to do. I believe that with all my heart. I believe that when I have done everything that I was put here to do, or when I have shown the Lord that I refuse to do what I was put here to do, that I believe that I'd be called home. Hopefully I'll go home. If I run from God, I hope he swallows me up in a whale instead of sending me to some place I don't want to be. Right? So I hope he has mercy and gives me chances upon chances. And he has. But the thing is, we allow this negativity into our life. We have to learn how to reject that. Okay, you don't have the strength to walk as fast as everybody else. That means you can't enjoy going to the park. Maybe you just got to find a different companion. Maybe you got to find somebody who won't be frustrated with you and you're so slow and we can't do this and can't do that. Get away from all that. Time out for all that. All it's doing is making things worse for you. Ooh, child, I don't know where this all came from, but I know somebody needed to hear it. You need to know that you have value today. And your value is not determined by how much money you throw at somebody. Your value is not determined by how much you pay for people who aren't going to pull themselves up by their bootstraps and do their own work. Your value is not determined by how much you pay to somebody or how much you let somebody use you just so you can have a drop or two of affection. That is not an abundant life. It's time for you to live abundantly. It's time for you to walk abundantly. And that begins with believing that you have value, that you have value. Whew. Okay, now I got to figure out how to talk about this insurance question because I done talked about it so many times. All right, all right. Yes, 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 yes. And this is difficult. This is really difficult. I'm going to say this one more thing on this, and then we're going to move on to this question because I do want to make sure that every time I talk about a topic, I at least get it within the 30 minutes of the podcast, right? Um, the older we get, the harder it is to make friends, especially if we're weird. And I don't mean weird in a bad term. I'm weird. I'm a unique personality. I am a hard charging, get it done kind of person. I'm also a big hearted person, but I don't do a whole lot of drama and foolishness. I enjoy and am entertained by people who do drama and foolishness, and I'm actually very in awe of them because I just don't have that right makeup to be able to. Okay, I just don't. So you know what? I got people on my team who do, so they can handle the times when it does call for a little drama and a little flair. Okay, well, I do have a little bit of flair and I can be a little dramatic, but I think you know what I'm saying. Everybody is different. Everybody has different things that they like or dislike, and the more unique you are, the harder it is to find people that you resonate with. So if you are, people fall on a bell curve, okay? Have y'all ever heard of the bell curve? If the bell curve basically says that for whatever thing it is, so what thing shows that women like to watch, the top shows that women like to watch will be the top of the bell curve, and then all the other shows. And out here on the fringe, you got weird people like me that like to watch documentaries and Korean dramas, K dramas. Okay, in the middle, you've got 50 Shades of Grey and Bridgerton. Actually, I didn't think Bridgerton was all that bad. I didn't think it was all that bad. At least the part that I saw. So I shouldn't say that one, but you know what I'm saying. The kind of rom coms and things like that. I'm not a big rom com fan. Sorry, but I like other things. My favorite movie is Pursuit of Happiness. Okay, that is not high on the bell curve for movies women like. Okay, so so everybody's different, and the more alike everybody you are, the more like the most people you are, the easier it is to find friends, the easier it is to not be alone. But when you're on the fringes, I'm not saying change who you are. You were made who you are for a reason. I was made who I am because the personality I have is wired for social change. The personality I have is wired to cut through the issues and cut through the red tape and cut through the bureaucracy and get things done and clear a path for the people who are more in the middle of the bell curve, who can reach the people that need to come through the path with me. You see what I'm saying? It takes all of us together. See, you can't just change your community and yell at people. Oh, I'm getting on another rant. We're gonna nip it in the bud. The spirit of the prophet is subject to the prophet, which means even if you feel led to say something, you can control it. All right. But I am gonna say you can't just go to your community and say, I'm gonna change this community, and you just yell at them all day. If you're not on the bell curve, you're not resonating with them. You need to create space for the people who are high in the bell curve to be able to bring everybody else along. Okay. And so the same thing with right when we get older, it's harder to make friends. It's harder to find those genuine, loving relationships the older you get, because quite frankly, a lot of people die out and there's less of a pool to choose from. Okay. But that doesn't mean it's impossible. Volunteering, if you're physically able to, getting to groups online if you're not physically able to get out and move around. There are ways to do it, and I'm not saying it's easy, but I'm going to tell you what's not easy. I'm going to tell you what's harder is the mental toll it takes on you, knowing that you're being used and abused, knowing that you were meant for more, knowing that you have more to offer if someone would just open up a door for you and give you a chance. And even worse is when we begin to believe what the people who just want to profit off of us tell us. We begin to believe that we're worthless. We begin to believe that we're washed up. We begin to believe that we have nothing to offer. And the more you start to believe it, the more true it becomes in your life. Don't be one of those people. You still have something to give. You still have something to do. You still have something to offer. Maybe it's time to try and find other ways to offer it. Try and find other ways to use your skill and your strength and your energy and your stamina and your resources. Okay. All right. Let me get to that inheritance question. Okay. This person inherited a whole lot of stuff with their brother. A lot of stuff. Over $1 million real estate, insurance, inherited IRA, a lot of things like that. I am missing some rings again. Oh, well, at least I got one of them on. I'm sorry. I got a little distracted there. So this person inherited a lot of stuff, about $1 million worth of real estate, plus some life insurance, some IRAs, some stock, some things like that. They're also going to be receiving rental income, and they want to use this money to pay off debt and continue to save for retirement. They're about 10 years from retirement, and they have a full-time job. This is an excellent question, because this is like something that rarely happens. And I'm sorry for your loss. Let me say that, because there's no amount of stuff that can make up for the fact that this passing away probably leaves. And I don't know, maybe they had a bad relationship. I don't know. Maybe her father was a jerk to her. Well, it doesn't say her or him. I'm judging from the career field that it's probably a her, but you don't know. But there's a hole in your heart. Even when you don't have a good relationship with a parent, there's always a hole in your heart when someone passes away. So I am sorry for your loss. And I am very impressed with the financial prowess of your father, because these properties have no mortgages. And so imagine $1 million in value of property with no mortgages. So remember what we said on an earlier time about net worth. Net worth is not what you have or what you make. It's the sum of what you own minus what you owe. And so in this case, $1 million of net worth, just over $1 million of net worth, dropped into this person's lap. And so they want a plan to pay off debt and continue to save for retirement. Well, that's exactly what I would do with these funds. Okay, so what would I do with these funds if this was me or if this was my client? And I guess this is a good time for me to note that I'm giving generalized advice. These are real world questions. Okay, these are real world questions that people are asking. But because everybody's situation is different, and because we have not entered into a client financial planner relationship where I do the research and the detailed analysis to really know your situation, I am just giving generalized guidelines. I'm not giving you financial advice in these sessions. Okay. And so while I intend what I give you to be accurate, you're going to want to consult with your own experts before implementing anything that I say. All right. So in this case, I would start and follow the baby steps. Okay. I would follow the baby steps, which are to start off with building an emergency fund so that if something happens, you don't have to go further into debt. Then I would put every bit of extra money, every bit of extra income into paying down debt. And once the debt is paid down, I would take the next baby step, and I would then fill out my savings account and have 6 months. I personally, with the uncertainty of the world right now, still, even though the pandemic is kind of going away and people are getting back to normal in most markets, there's still some markets that are very affected by the pandemic still. But because things are going back to normal, I know people feel like it's going to be better, but I'm not 100% sure that we're out of the woods yet economically. So I would recommend a 12-month savings for most of my clients. I would recommend they work towards that. And then after that, I would start investing. And you say, well, this person's got 10 years till retirement. They probably need to invest right away. Investing right away does not help you if you are paying interest on debt. And investing right away doesn't help you if you have a catastrophe and you don't have savings to do anything about it, because it's harder to liquidate those stocks and it's harder to liquidate those mutual funds. And if you're buying real estate, it's harder to sell that real estate to recoup those liquid costs. You want to have some liquid money. You want to have liquid money. You want to have adequate insurance. You want to have an investment strategy, but you want to get yourself out of debt. Okay. And so that's what I would recommend. And then once they're out of debt, I would go and start doing 15, maybe even 20% at this age of life. I would maybe bump it up some into investments, whether that's an IRA or into your own mutual funds or things like that that are separate from an IRA, depending on your income levels will determine how much you can put into an IRA, right? If you have a 401k option, if you have your own business, you can create your own IRAs and 401ks and things like that, your own Roth accounts. You can create that working with a CPA. Those are the kinds of things that I would recommend. And I would seriously step through that process. It sounds so basic, but that's the process I would walk through. Okay. And then after that, I would start looking at, okay, can I start funding kids or grandkids college? Can I start putting aside 529s? Did you know that if a grandparent creates a 529 for the child, then it doesn't count against the child's FAFSA? And you say, well, gee, if the grandparents have that kind of money, they shouldn't fill out the FAFSA. Well, other people do. Other people get to go on work studies, and they take the work studies from people who really need them, because all their family's wealth is tied up with grandma's name and not parents' name, because they know how to skirt the system. So maybe we should learn how to take legal advantage of legal situations and legal processes that help us get further ahead with our money, right? So I would start looking at things like that. And then I think with all that situation, with these money values, you've got $1 million worth of real estate with no mortgage at a 10 cap. You're getting $100,000 a year off of it. So I'm thinking that that's fairly adequate as a retirement plan, especially with everything else that we've talked about. Okay, well, we are at about an hour. I'm going to check again the free conference call and see if we have answers. Normally, I try to do at least 2 hours, at least an hour and a half to 2 hours on these, because I do extract these for the Building Wealth Together podcast. These Q&A sessions become the meat of the Wealth Building Wednesdays. But the problem is today I'm flying out super early in the morning, so I want to answer all your questions. But if you don't have any questions for me tonight, I'm going to go hang out with Mr. Man for a little bit, and then I'm going to get to bed, because I'm going to DC, and then I'm flying back from DC, and then I'm actually going to Hawaii. It's funny. I'm going to Hawaii for a revival. I'm not going for pleasure. I'm going for a revival to support one of my friends in this revival, and then I'm coming back, and I'm going to. I'm just traveling a lot, so I want to answer your questions. I want this to be fruitful for you. But I don't see any questions. I don't see any on free conference call, and I don't see any new ones in the Ask JJC. There are other questions in here, but they are questions that I've kind of answered already. Was it Monday when we did the how to charge what you're worth? Yeah, so if you need that, make sure you go watch that, okay? All right, y'all. Well, I think that's going to wrap us up for today. Again, if you're listening to me as part of the Building Wealth Together podcast, I want to encourage you to join us live every Thursday night, 8:30 Central, 9:30 Eastern. Every first Thursday is our Fireside Chat, where I answer your money questions. What I like to think is style and grace. If I say it enough times, it'll become true, right? Our every second Thursday is our 7-figure business building, where we look at how you can create multiple streams of passive income. And then every third Thursday, that's where it began. Every third Thursday at Keller Williams Kingstown in Virginia, is our real estate Thursday, or Real Estate 101. And then every fourth Thursday is our Empowered Entrepreneur. How do you become the person you need to become in order to get what you want to get out of life? And so on the rare occasions that we have a fifth Thursday, it's usually a replay or a on the spot kind of catch all kind of class. But those are our classes, and I hope that you'll join me next week. As my speaking and as my coaching gets more time limited. And so, of course, when you get time limited, you raise your prices. I will never forget what it was like to be $800,000 in debt. And I will never forget what it was like to be a kid standing there with the box, waiting for them to blow the whistle so I could run through the rec center and get and fill up one of our 2 free boxes of food that month. Right? Like I'm never going to forget those things. And I'm always going to create a pathway for people to get their financial questions answered, even if my time costs too much now for one-on-one, or my time is too limited to adequately serve everybody one-on-one. Okay, so I have a variety of group coaching, one-on-one coaching, but these Thursday nights will always be free for you to get your money and business and entrepreneurship questions answered. That's all I've got for you today. I'm JJ Conway. Y'all take care and be blessed.